Hello, it's Thursday the 10th. I'm FX Blue, and this is the market brief. So, tensions are simmering in the Brexit sausage war. Sizzling, you might even say. Have that one on me. But despite hardly any sausages actually being involved, the sausage war makes for better headlines than, I don't know, hamstrung exports. I could go on all day. But anyway, the dispute is over chilled meats. The deal we signed kept Northern Ireland in the single market while the rest of the UK left, and to avoid checking goods along that sensitive Irish border, the deal agreed that checks would be made on the way into Northern Ireland. Now, those disruptive checks were delayed, and the UK cheekily extended that delay without agreement from the EU. You can imagine how well that went down. But it's all due to come to an end at the end of this month, and at that point, the EU policy banning imported meat products means that the UK can't sell meat in Northern Ireland. Which silly sausage signed that deal? Boris did. So the EU, already with their knickers in a twist after the UK rogue extension, say the deal has already been done and the UK should honour it. But Boris is adopting his usual style of negotiating with Brussels, and he's ignoring the issue, saying there's a deal still to be done. It's hardly like the EU will be flooded with meat products through a Northern Ireland loophole, but still. Biden's in the UK ahead of the G7 meeting this week. He is very protective of the Good Friday Agreement, and he's warned that this could have consequences for any free trade deal with the UK and US. You could say the stakes are high. So there you have it, the sausage war. It's actually a thing. Andy Haldane's been on again. He's making the most of his time left as chief economist, and he's keen to reassert his reputation as a cheerleader of the recovery. He thinks that the final removal of restrictions, still scheduled for June 21st, will provide an enormous boost to the economy, forecasting levels of growth that far exceed any other developed nation. He thinks it will provide a boost to the country's psyche as well, and I think that could be pretty well timed. The Euros will be underway by then. So plenty of pressure on Boris then, and I wonder whether the footy will figure at all in his private deliberations. We'll see how that one plays out. The market remains pretty flat. Sterling lost a little ground but remained range bound against the dollar. We fell to about 141.10, which is where we opened today. Over in the US, inflation data is out today. The headline is expected to get very close to 3.5%. Squeaky bum time. And the market is getting a bit twitchy over the Fed's view that all this is transitory. They're worrying about how long inflation will remain above the central bank's target. Last time we saw inflation at that level, by the way, was about 10 years ago. So perhaps they've got a point. Normal logic has resumed though. Expectation of higher inflation means the Fed reaction should be getting closer. So buy the dollar ahead of everyone else, hunting that future yield, and hope the data doesn't disappoint. So yesterday the dollar index rallied a little, but it only got to 90.16, and euro dollar pulled back to close at around 121.70, which is where we opened this morning. Right, that's it from me. Farcical sausage-based chat this morning. Let's see what we got in store tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.